Good morning, everyone. Tim Nyland here. Today is Tuesday, December 22nd, and this is a pre-recording of our Zacks Professional Services Weekly Strategy Call to be released on Wednesday, December 30th. Each week, we focus in on what's moving the market, interesting trends, and investing opportunities. If you have a topic you'd like me to explore in a future video, please leave me a comment below. You can also check out previous strategy calls on our channel, and you'll also find many more videos on investing and making the most of Zacks Pro platforms. And don't forget to hit the subscribe button below to make sure you never miss any of our future calls. Today, we are going to resume our hyper growth strategy series that we started on December 2nd. And we're going to take a look at a framework using only 4 stocks to corner the semiconductor market for the next 5 to 10 years. In the spirit of full disclosure, I currently do maintain sizable exposure to the 4 stocks we are going to be discussing today. I am not here to pitch any of these 4 names as a buy or sell. Rather, I'm here to help you identify the analytical issues of relevance that you should consider, and from here, you will need to draw your own conclusions regarding any buy or sell decisions. Let's go ahead and get started. The way I like to look at the chip industry is a little bit different than most people. And the reason I choose to look at the chip industry like this is I try to segment the market into a smaller, more manageable field, if you will. There are many chip designers, many chip manufacturers. And the idea is we don't want to be in the business of trying to pick the 1, 2, 3, or 4 that are going to be successful. We're trying to come up with a 30,000-foot macro strategy plan to make sure that whichever ones we do pick are going to cover the largest, broadest number of industries and try to guarantee our success as much as possible. So the way I go about this is I look at the designers and manufacturers across 2 different classes, and I call them special purpose and general purpose. And in the special purpose category, you've got things like modems, field programmable chips, radio frequency chips, those sorts of things. These are all what you would consider more components of a more vertically integrated offering. And so sample special purpose players in the modem space would be somebody like Qualcomm, they're the leader. Field programmable chips, Xilinx, and then obviously the leader in RF frequency chips would be Qorvo. And the general purpose examples, these are going to be your broad stroke general purpose processors. So these are going to be your CPUs, your GPUs, and we'll discuss a lot more about ARM processors here in just a minute. So there's basically open architecture players, which are AMD, Nvidia, Intel, and ARM. And then there's what I'm going to dig into a lot further with you is the vertically integrated players, which are Amazon, Apple, Google, and Microsoft. And just be aware, the reason we take this approach is to manage the space. Again, this is one of the largest, fastest moving, most competitive industries in existence today. Obsolescence literally happens overnight. And Amazon, Apple, Google, Microsoft, all these companies are now pushing further into vertically marrying their own chip design with their own software to squeeze out even more operating costs and efficiencies. So we're going to get into how all of this relates, and it's very, very easy. So what I want everybody to do is sit back and let's not dwell on the small stuff. Let's think real big picture here. The demand for chips is massive, and it's growing each and every year. So the current estimates for chip demand over the next year stand at basically, and I'm going to say roughly 1 trillion chips. And if you consider that the most recent estimate on the global population is around 7.8 billion, if you do the math, that equates to roughly 128 chips that need to be manufactured for every man, woman, and child on Earth over the next year. I think I may have touched on some of these stats in another webinar that I did back in the spring of this year around the 5G strategy. So I've updated these stats since then. If you think about the number of chip designers coupled with the number of global industries they serve, again, the prospect of being able to navigate this landscape and being able to pick the winners would just require a full-time staff of researchers that none of us can afford. So I have broken this down into a very simple framework, and I suggest and propose that you take a look at this and consider following it. So there's basically two things that are going to drive our decision when investing in the chip market. So the idea from a macro perspective is that we like total addressable market, right? So the idea that we're already at demand of 1 trillion chips currently each year, and then by 2026, chip demand growth is expected to increase by 50%. So over the course of now and then, I think if you compound that interest rate, it's fairly sizable, probably somewhere between 5 and 10%. But you're looking at basically 1.5 trillion chips by 2026. The key here is consumption. Chips are consumable. They get hot. They die an obsolescence death a little each day, right? The second, and we all complain about it, right? The second you buy a new iPhone or a new iWatch, 6 months later, they got a new, shinier, better one out. So new chips are always needed. So here are the two things we got to do to capture the largest amount of this growth. We need exposure to the fewest number of chip stocks through this concept of total addressable market. So the idea is we've got to figure out of all of these players in the chip market, and there are a ton of them, which companies are poised to capture the bulk of this cross-industry growth, right? If anybody's listened to my webinars, I'm not a big fan of one-trick ponies. They're great. You can make some outlandish returns, but they do carry a high degree of risk. I tend to focus on more of the surefire bets that are well diversified. We don't want to own all semiconductor stocks, and we don't want to over diversify with an ETF, right? This does not maximize our returns, and I've done a webinar on that as well. You can look on that in our playlist. So the second point I want to make here is that we do want to stick with the majors, and we want to pay that toll in terms of valuation. Some of these major players are a little bit more expensive, but there's a reason why they're expensive. You're buying the quality, you're buying the growth. You don't want to get steamrolled by the push for more specialized chips and vertical integration. We're going to talk a lot more about this here in a couple slides. So the question you've got to ask yourself, and I'm going to make you aware of this a lot more in just a minute, but the companies like Apple, Amazon, Google, and Microsoft are becoming more and more eager to design and develop chips that better integrate with their own server and operating system software. So this trend is really in its infancy. We're going to talk about it more, but it basically started in 2016. And over the last couple of weeks, we've had announcements from both Apple and, as recently as last week now, Microsoft coming out with its own vertically integrated chip design, putting even more pressure on Intel. So again, if we look at this basket of stocks, Apple, Amazon, Google, and Microsoft, as the companies that are basically driving the direction and the demand for these chips, we have to figure out and take a lead from that and figure out how we're going to best position our portfolios, okay? So again, we got to think really, really big picture here. The global market for chips over the next 5 years, if you think that in any way you've missed any run in the chip market, you are wrong, okay? This is in its infancy. We have literally broken Moore's Law. Moore's Law is effectively dead. And a lot of the chip companies themselves that were cyclical in nature, the demand for chips is so extreme now, and the software is utilizing such a larger degree of the capacity of the chip's processing power that this space is rapidly turning into a growth space, and as you'll see in a minute, even a hyper growth space. So if you consider the number of lines of code and everything that needs to be done to process AI, so artificial intelligence, right, autonomous driving, the Internet of Things. If any of you don't think that within the next year you're going to be able to talk to your kitchen faucet to pour you a cup of water, it's already available. This is real. And all of that requires chips. The big data and data farms, we all hear about that. But if you look at Snowflake and Palantir and all these other big data companies coming out, this is real. Quantum computing, real, with everything in the medical industry, from industrial purposes, you name it. We've spoken a lot about the 5G networks and the migration from 4G. We already know that the average 5G cell phone is going to require orders of magnitude larger number of chips than a 4G phone. Global internet adoption expansion is massive, right? We talked about this when I unveiled the next hyper growth stock behind Tesla, which was Mercado Libre. Latin America is currently the leader in global internet adoption expansion, and that marketplace is roughly 635 million people. You've got the continent of Africa probably next, and that has a population of roughly 635 million, or actually 630 million, I apologize. So anyway, large degree of global internet adoption. Just think about the number of chips as these people come online that are going to be required. Handheld devices, cell phones, wearable devices, medical monitoring, these are all a new specialty kind of chip called an ARM processor. And we're going to talk a lot about that here in just a minute and how this plays into our strategy. Laptops and desktops, right? Especially within the COVID era. Everyone knows how difficult it was to even try to find a laptop or a desktop PC back in the spring. And if you go out and try to find a MacBook or an iPad or anything right now ahead of Christmas, they're pretty much sold out. So we can't even keep up with the demand. Okay, servers and data centers. And then the last one, which is huge, is cryptocurrency mining, because that is a massive demand constraint for GPUs, which are the graphics processors, primarily driven by Nvidia. So the gaming requirements and cryptocurrency mining, big data, autonomous driving, that's all driving the demand for those big, powerful GPU processors. So there's GPUs, CPUs, and ARM processors we're going to talk about. So let's look at the very first of our 4 stocks and how to corner the chip market. And this is the primary candidate I was speaking to about when I was talking about cyclical stocks going into a hyper growth phase. And if you look at what's going on here with advanced micro devices, you would think that you missed it. And most people thought they missed it when AMD was at $25, and then it went to $35, and then you still thought you missed it at $45, and then you thought you missed it at $55, and then it was a bargain at $65 because now it's $92, and it's probably going to be over $100 soon. And if you look at the growth that this company is compounding, there's good reason for it, right? 110% growth in FY1, 58% growth in 2021, which is FY2, 2022, 26% growth. Okay, and the estimates are just constantly being revised up. The analysts just can't revise. Advanced micro devices can't even produce enough chips to meet the demand, specifically on the CPU GPU side. AMD is just it's an incredible company. So this is stock number 1, and we're going to talk about why it's stock number 1. Again, cyclical stock turned hyper growth stock. Okay, these guys, and I have all of this here in this presentation, and so that you don't have to take notes on any of this or rewatch this video, if you email me at the email addresses that I will give you at the end of this presentation or this webinar, we will make this PowerPoint deck available to you. So don't worry about taking notes. So currently dominating the global x86 chip market. These are the chips that are used for laptops and desktop PCs, right? Now keep in mind, these require a 110 outlet and a large battery if it's a laptop. These are higher power consumption chips, and they're known as the x86 class of chips, okay? Currently, AMD is also making massive inroads into the global server chip market. Okay, this is all coming at the expense right now of Intel. They're also a dominant player in the global GPU market with Nvidia, and these are, again, the big graphics processors. As a matter of fact, the most recent graphics card that AMD came out with is actually faster and cheaper than Nvidia's top-of-the-line card. And so AMD is a ferocious competitor in the GPU space. And again, these are the processors that are used in graphics, gaming, and cryptocurrency mining, or any of the AI, autonomous driving, that sort of thing. All of AMD's growth in the laptop, desktop, server chip market is coming literally at the expense of Intel. And I warned everyone about this in March, April of 2020 in my 5G strategy call, and nothing has changed. As a matter of fact, it's just gotten worse now with Apple and Microsoft both announcing full vertical integration of their chips to squeeze more and more efficiency out of the processors by marrying the chip design with the software design. This has only been done recently within the last 5 years, and we're going to talk more about that. The CEO of AMD is Lisa Su, and second only to Elon Musk, she's probably the most transformational CEO I can think of in my recent memory. So prior to Lisa Su taking the helm, there was really discussion around the liquidation value of AMD, which is why I was kind of skittish on this name prior to Lisa Su taking the helm. So Lisa Su did something remarkable when she took over as CEO, and she recognized that the bottleneck with AMD was actually their fabrication arm, and she spun off the AMD fabrication arm and then fired them. And then she basically hired Taiwan Semiconductor to start fabricating all their chips. And today, Taiwan Semi with AMD, they are 2 years ahead of Intel on the 7-nanometer transistor fabrication cycle. So the next time you're watching CNBC or reading in the Wall Street Journal about how great of a value play Intel is, I want you to think twice. Intel is cheap for a reason, and AMD is expensive for a reason. And you pay up for growth and you pay up for quality. Okay? Intel has lost its way in fabrication. They still fabricate their own chips. They're 2 years behind on their bread and butter x86 7-nanometer platform. And AMD with Taiwan Semi is already working on the 5-nanometer platform. AMD is literally now the only thing standing between Apple owning the entire laptop and desktop PC market. Apple's new M1 chip is built on the AMD 5-nanometer platform, and it absolutely is the highest performing. Because it's vertically integrated with Apple software, it is extremely, extremely efficient, and the reviews on it are just spectacular. Also be aware that AMD chips now power the new Sony PlayStation 5 and Microsoft Xbox Series X. So you can see the momentum that AMD is gathering. They are definitely one of the stocks that you'll want to consider if you want to be able to corner the semiconductor and the technology market over the next 5 to 10 years. The next one is Nvidia. And Nvidia has been a hyper growth stock since the crypto craze started in 2015. And the story is the same, right? If you think it was expensive here, then you love it here. Same story as AMD. And the idea here with Nvidia is that they dominate the global GPU market. And this is where all the real heavy lifting is done from the computer processing perspective. So gaming and graphics, AI, autonomous driving, they literally have an OEM package for autonomous driving and for vehicles that's used by Toyota, it's used by everybody. Quantum computing, cryptocurrency mining. And again, you're going to see this name pop up here across many of the slides, and it's Taiwan Semiconductor again. So not only does Taiwan Semiconductor produce the chips for AMD, but they also produce chips for Nvidia, right? So many of you may not have known this, but in Q2 of 2020, Nvidia announced that they were going to acquire ARM, a company out of the UK owned by SoftBank. And when you hear about ARM chips, I want you to think about low energy, low draw, low heat, right? So these are all of the chips and the technology that ARM licenses for all wearable devices. The Apple Watch, the Samsung Watch, now the new Apple M1 chip, medical monitoring devices, every single cell phone. If you think about cell phones, right, you can't run around with a laptop-sized battery on your cell phone, and you can't run around with your cell phone plugged into a 110 outlet like you can with a laptop. So you have to use chips inside these wearable devices and cell phones that are very, very low energy draw and very, very low heat production. And that's what an ARM chip is. And so Nvidia is acquiring ARM. It's going to take some time. There are some hurdles. But when this goes through, Nvidia will literally dominate the global market for ARM and GPU processors. So regardless of who wins the electric vehicle war, and regardless of who wins any of these wearable device wars, you're going to be covered owning Nvidia, because they basically they have the market cornered for the ARM processors and the licensing of the technology for anybody else who wants to manufacture with using that technology. Same thing with GPU processors, right? It's going to be Nvidia and AMD. So again, ARM technology is licensed by Apple for use in its new M1 chip for MacBook and MacBook Mini. I should say Mac Mini. ARM technology is used by Microsoft for use in its new cloud server chip. And ARM technology is also in use by Amazon in its AWS cloud server chips. So this is huge for Nvidia. The next stock is actually a basket of 3 stocks. Actually, I should say 4 stocks. And I will correct the slide before I send it out. It's a basket of 4 stocks: Apple, Amazon, Google, and Microsoft. And the idea here is that you have to pay this toll. The good news for anyone who is following the earning certain portfolio strategy, this basket of tilt stocks, you're going to be covered because you already own these in your portfolio. Most people have exposure to Apple, Amazon, Google, and Microsoft. Again, you have to pay this toll. You have to own this group. These are the 4 companies, and it's their sheer scale, okay, that is literally driving and defining growth in the chip space. I have a statistic at the very bottom of the slide that you're going to want to hold on to your chair before you read it, because it's going to stun you. But we'll get there in just a minute. So Apple announced the new M1 chip probably a month ago with ARM technology to again reduce dependence on Intel. Taiwan Semiconductor, again in bold, you'll see it on every slide. They are a predominant player, manufactures the chip for Apple, not Intel. Okay. Apple's new M1 chip again is on Taiwan Semiconductor's 5-nanometer transistor fab, and it has literally set new performance standards in the PC market through that vertical integration that I've been talking about. So back in 2000 and I think it was 19, just to give you a little bit of background on this next bullet point, Apple actually acquired the modem technology group from Intel. And they did this as a shot across the bow because of the legal battle they were getting in over Qualcomm and Qualcomm's dominance in the switching capacity and modem technology. So if you're going to switch your phone from tower to tower between 3G, 4G, or 4G and 5G, Qualcomm has that modem technology locked up. So every single cell phone owned that is going to automatically switch without turning off between a 3G and a 4G signal or a 4G and 5G, that is licensed technology from Qualcomm. So it's literally in every phone. And the idea here is that it's going to be in every vehicle as well, Qualcomm, because you're not going to be able to drive in autonomous mode, lose connection with a cell tower just because you switch between 4G and 5G, have to turn the car off, turn it back on. So the automatic switching that takes place between 4G and 5G seamlessly is powered by Qualcomm. Well, Apple saw this coming back in 2019 and acquired the technology team from the modem group of Intel. So acquired that whole division from Intel, and subsequently signed a 6-year license with Qualcomm for the use of that modem technology. And so the idea is now that Apple just announced that it's going to basically create its own modem chips is a shot across the bow for all Apple suppliers, right? So Qualcomm, Qorvo, Skyworks, they all cratered on this news. So here's another example of that vertical integration, those special purpose chips, and showing the power and dominance of this basket of 4 stocks and their ability to dictate where this semiconductor market goes. They are the tail wagging the dog. And we must not forget that. So, week of December 14th, Microsoft again follows Apple. I mentioned this before, but the idea here is that Intel stock fell again, right? So Intel has just been constantly hammered literally all year long. They got hammered by AMD on the x86 platform. AMD is now the dominant player. And you've got Microsoft announcing vertical integration. You've got Apple announcing more vertical integration. This is all coming at the expense of Intel and at this point, Qualcomm. Amazon vertically integrated semiconductors with its own AWS software back in 2018. And again, if you trace all of this back, those chips were fabricated by Taiwan Semiconductor. Again, I told you you hear Taiwan Semi a lot. All roads lead back to Taiwan Semiconductor. The last statistic I want to read for you is the one that's going to shock you the most. And keep in mind, this is back in 2016, and this is not my interpretation. This actually came from a researcher at IDC, and this was in Wired magazine. And it's Google vertically integrated its own chips back in 2016. They were the very first ones to do it actually on the Intel fab, during which time Google purchased roughly 5% of all CPUs sold on Earth. Let that sink in for a minute. If you had no idea how powerful and how dominant the scale is of these four companies, think about all of the computers that are sold with CPUs. And then think for a minute that Google purchased 5% of all CPUs sold on Earth. That is absolutely staggering because now it's almost 2021. We're 5 years later. I can't even imagine what that statistic is now. So when we roll on to stock number 4, it should not come as a surprise now, after I've mentioned Taiwan Semiconductor on every single slide. And yes, it's Taiwan Semiconductor. And this particular company is absolutely amazing because it's always been a growth stock, but it's a slow and steady growth stock. And in Q2 of 2020, Taiwan Semi became the world's largest semiconductor. It passed the likes of Intel due to Intel faltering and Taiwan Semiconductor picking up all the demand from every single company out there. We've only named a few. They've also passed up, obviously, Intel and Samsung, and most advisors are really not aware of this fact. The other thing that you may not be aware of is they're not a member of the S&P 500, and so this is an opportunity to add value versus the S&P 500. They're 2 years ahead of Intel on the 7-nanometer fab cycle, and they're already down to the 5-nanometer fab. And manufacturers across all industries for the likes of the following market leaders and more. I mean, AMD, Apple, Nvidia, Amazon, they all utilize Taiwan Semiconductor to manufacture their chips. Okay, so this is huge. So there are many good specialty players. Like I love Qorvo, I love Qualcomm, I love Broadcom, I love Micron, right? But if we want to keep this simple, and we don't want to get steamrolled potentially by Apple or any of these other players wanting to go vertical. Keep in mind that Qorvo gets, roughly half of its revenues from Apple. So if all of a sudden Apple decides they want to, take out a company like Acoustis Technologies, which I told everybody about back at the 5G play, and I own that one as well, and remove the dependency on Qorvo for RF signals, they certainly could do that. And that would be a huge blow to Qorvo. So the idea is if you want to play it really safe and corner this market for the next 5 to 10 years, own the majors, right? So if you own AMD and you own Nvidia and you own the basket of Apple, Amazon, Google, and Microsoft, and you own Taiwan Semi, you've literally got the bulk of the entire chip market cornered for the next 5 to 10 years. You've got PCs covered with laptops, desktops, servers, and cloud computing platforms. You've got GPUs covered with graphics, gaming, crypto mining, artificial intelligence, and quantum computing. And you've got, with ARM processors and NVIDIA, all the wearables, cell phones, 5G networks, autonomous driving, and Internet of Things, right? Talk to your faucet, talk to your refrigerator, you name it, right? So that's about it for this week. Thank you for attending. And if you found this video helpful, please hit the like button below and be sure to subscribe for future videos. I want to make a special note to everyone to please email me or email any of these email addresses to get a copy of this PowerPoint deck. And I'll go back one slide, and remember to follow me on LinkedIn and Twitter. And you can also follow Zacks Professional Services on LinkedIn and Twitter as well. Thank you for watching, and I hope to see you all next Wednesday for another weekly strategy call. Thank you, and Happy New Year.